Forex Trading, the ultimate guide for beginners. Written by Ethan Miles. Narrated by Emad Schannat.
Introduction. The foreign exchange market, or Forex market, is a fast-paced and exciting market. Until recently, this kind of trading was only done by central banks, corporations, financial institutions, and wealthy individuals. But thanks to the emergence of the internet, many more people can join the market and use it to do investing as well. Daily currency fluctuations are going to be small. Most pairs of currencies are only going to move about a cent each day, which will represent a change that is less than 1% in the value of the currency. This means that in most cases, the Forex market is going to be one of the least volatile financial markets around. Therefore, many currency speculators are going to rely on enormous amounts of leverage to increase how valuable a potential movement can be. In fact, with the Forex market, the leverage can be as high as 250:1. This leverage is really high and can be really risky, but because of the deep amount of liquidity and the fact that the Forex market is available to be traded around the clock, many brokers can make high leverage the standard of the industry, which can make the movements more meaningful for most currency traders. Extreme liquidity and the high leverage of this market has really helped to push rapid growth in the market, making it a great place for investing with many traders. Positions on this market can be opened and then closed again within minutes, or the trader can choose to hold on to the position for months. Currency prices are going to be based on the idea of supply and demand, or that currency pair at the time, and it is hard to manipulate them easily, simply because of the size of the market is just so big. Even central banks and other large players in the market are not able to make changes that will move the prices of currency pairs as well. While many of the players in the Forex market are going to be larger players like banks and financial institutions, there are still opportunities for investors to get in. However, for the individual to do well, they need to know some of the basics of any movements in the currency, or they are going to run into trouble and will lose more money than they can gain on this market. The foreign exchange market is basically the plan where companies and individuals can trade currencies. Currencies are important to people all throughout the world because this is what needs to be exchanged to help conduct foreign business and trade. If you live in the United States and you wish to buy some cheese from France, for example, either you or the company that you purchase the cheese from will need...
Sample complete. Ready to continue?